Yes, we can start.
Good evening, everyone. Welcome to this special webinar on this public issue of Power Finance Corporation NCD by HDFC Securities. I am Neeraj Singh, third-party product head and distribution for HDFC Securities. And today we have two esteemed guests from Power Finance Corporation, Mr. Rajesh Kumar Agarwal, Executive Director Finance from PFC, and Mr. Tabassum, Chief General Manager Finance from Power Finance Corporation. As we all know, power sector has been one of the focus theme and sector of the government, and it is one of the pillar of our economy. India has shown great potential in terms of being an energy self-sufficient country, and there are many progress which are happening on daily basis. It will be unfair on my part to mention the contribution of Power Finance Corporation, which ensures the continuity and continues to be one of the strong pillar of support to this entire sector. The current issue which is on from today gives a good opportunity for all the investors to lock in a fixed income over a long period of time. And this is their third issue, which clearly demonstrates the continuity and the commitment of PFC in this sector. This is also the first public issue with zero coupon bond, where you have the opportunity to double your money in 10 years time. So without taking much time, I'll invite Mr. Basum and RK Agarwal to present the product to all our clients. Over to you, sir.
Good morning, everybody. Good afternoon, rather, and a very warm welcome to all of you. It's indeed a pleasure to have you all with us today as we come together for PFC's third public issue of taxable bond, an important opportunity for investors across the country. We have already issued the launch, started our issue today, and you must have seen that it's getting overwhelming response across India. Over the years, PFC has earned the trust of investing community through consistency, prudence, and performance. In the last 5 years alone, our two public bond issue mobilized 7,000 crore, with each issue subscribed more than 5 times. This response is not incidental. It reflects deep and sustained confidence in PFC's financial strength, governance, and purpose. As India's largest AAA rated NBFC in the power sector, PFC is a long-term partner in nation building. Every rupee invested with us supports the creation of reliable power infrastructure, power that lights homes, fuel industries, and enables economic growth of the country. Our journey is closely aligned with the national aspiration of Viksit Bharat by 2047. A resilient and future-ready power sector is fundamental to achieve this vision, and PFC continues to serve as a key financial pillars supporting this transformation. India's power sector is at a crucial stage of development. The transition towards renewable energy, battery storage, and planned expansion is in nuclear capacity, with national target of 500 plus gigawatt of renewable energy by 2030 and 100 gigawatt of nuclear capacity in the years ahead. India's ambition is clear. Today, our installed capacity stands at 510 gigawatt, with 254 gigawatt already from renewable sources. PFC is deeply embedded in this growth story. Our financial strength provides a strong foundation for investors' confidence. We support nearly 50% of India's installed power capacity. Our loan book stands at more than 5,61,000 crore as on 31st September 2025. We recorded a profit of 8,963 crore in the first half of FY 25-26. Our net worth is 97,525 crore, and our capital adequacy ratio is at comfortable level of 21.62%. These are not merely numbers, they are indicators of resilience, disciplined risk management, and a sustainable long-term business model. This public issue is our invitation to investors, particularly retail investors, to participate in journey of India's growth. This issue also carries important firsts, that is India's first public issue of zero coupon bond, and followed by this is the first PSU public bond issue for both financial year as well as calendar year. We are offering maturity option of 5 year, 10 year and 15 years, enabling investors to align their investment with their financial goals. In a first of its own kind initiative, the zero coupon bond are also part of this public issue. The zero coupon bond are notified by CBDT and offer simplicity and certainty. A single investment today that nearly doubles over 10 years period with tax benefit at maturity as per applicable tax rate. No TDS would be deducted on zero coupon bond. For investors with a longer horizon, the cumulative option provide the strength of compounding with the potential to nearly triple the investment over 15 years. In a time when investors seek safety, transparency, and predictable returns, this public issue offers a comprehensive package. Before I conclude, I would like to place on record my sincere appreciation for the continued support, trust extended by our investors, arrangers, brokers, and stakeholders. Your participation in our 54 EC bond issuance have also been invaluable, and we look forward to your continued association in making this public issue a success. I also wish to thank our arranger and entire PFC team for their committed efforts and dedication. Now, may I request our team led by Tabassum to take this discussion forward to deliberate on the highlights of this issue and to make useful information sharing with all the investors, so that investors are comfortable investing with us, and that is being reflected in today's response, where we are almost about to touch the base issue size, that is 500 crore. Over to Tabassum and team. Thank you very much.
Thank you, AD sir, for those opening remarks. And thank you, HDFC Securities, for organizing this webinar. And HDFC Securities has been our partner and associate in 54 EC bonds as well. So we are very excited at this opportunity to connect to all these people through HDFC Securities. And I must appreciate and acknowledge this gesture from all of you. I am sure all of you are aware of Power Finance Corporation, of what we do as a company, what are our strengths. But just to give you a deeper dive into our operations and into our company, I would now request Vishna to give a brief PPT on our company. Over to Vishna now.
A very good evening to our Executive Director Finance, Mr. Rajesh Kumar Agrawal, sir, CGM Finance, Mr. Basum, and all the esteemed guests who have joined today. Myself, Vishna Ram Jakar, Chief Manager Finance. I will now present the PPT. As we invite this public issue, it is my absolute pleasure to present the overview of our company. Today, I will take you through our corporate presentation outlining the company's journey, nature of our operations, and some of our key financials. I will also share key highlights about our upcoming bond issuances. Can you make it full screen? Sure. Okay. Yeah, thank you. Okay. PFC's journey began in 1986 as a company dedicated to power sector lending. During the last 40 years, we have achieved many milestones. I would like to quote a few. We have registered as a NBFC in 1998.
and we were categorized as an infrastructure finance company in 2010. In 2019, PFC acquired 52.63% stake in REC and we became its holding company. In 2021, we got the Maharatna status. By 2022, we expanded our mandate beyond power and fund the broader logistic and infrastructure sectors. 2024 marked our global pivot with a launch of PFC Infra Finance IFSC Limited. PFC is the first government NBFC which has established a subsidiary in IFSC Gift City, Gujarat. This subsidiary will allow us to lend in foreign currency and access to global market. Talking about our main product and services, we are doing majorly project financing. We are also providing short-term loans, loans to equipment manufacturers, and debt refinancing of commissioned projects. As of September 2025, our loan assets were rupees 5.6 lakh crore, out of which our renewable portfolio is almost 85,000 crore. Our net worth has reached nearly 98,000 crores. Talking about our quality of assets, our net NPA has came down to lean 0.37%. These financials reflects our financial discipline, our sustainable business model, and the quality of our credit appraisal. I would also like to take a moment to talk about our strength as a company. Our expertise is not just in lending, it's in power sector itself. We are doing end-to-end financing across the entire power value chain. This deep technical knowledge allows us to navigate the complexities of renewable energy and infrastructure transition. As a AAA rated Maharatna PSU, we have increased stakeholders' confidence and also access to funding sources at competitive cost. Our consistent performance, marked by stable profitability and regular dividends, is a result of our rigorous credit appraisal framework. Apart from our lending operation, we are also a trusted partner of Government of India for its flagship reforms, which I will take about later in upcoming slides. Continue with PFC's strength. PFC's board of directors bring together a strong mix of executive leadership and distinguished independent directors. Our board consists of 4 executive directors, our CMD, Madam Parminder Chopra, Shri R.R. Jha, Director Project, Shri Manoj Sharma, Director Commercial, and our Director Finance, Shri Sandeep Kumar. Apart from our executive director, we also have 5 independent directors and a government nominee director on the board. This ensures robust governance and prudent decision making. With respect to our lending operation, PFC is funding the entire power sector value chain from generation and transmission to distribution, alongside its backward and forward linkages. Our core offering includes fund-based products like project term loans and short-term working capital loans, corporate loans for established entities, and buyer's line of credit to manage immediate liquidity. We are also refinance commissioned project and also provide consultancy services through our wholly owned subsidiary, that is PFC Consulting Limited. Beyond traditional power, we have also expanded our footprint into the broader infrastructure sector. Our diverse portfolio includes funding for modern mobility solutions like EV charging infrastructure, metro systems, and airports. Looking forward the future of infrastructure, PFC is also looking at financing new age sectors, including biofuels and data centers. So now I will talk about recent achievements which PFC has achieved. In the first half of the year, we saw our renewable loan assets grown by approximately 32% year on year, jumping from 64,000 crore in first half of 2025 to nearly around 85,000 crore in first half of financial year 26. PFC is also expanding its global footprints in diversifying its fund sources through international partnerships. More recently, in August 25, we signed a significant Euro 150 million loan agreement with Germany KfW to strengthen India's power distribution sector under RDSS scheme. We also secured a landmark JPY 120 billion credit line from JABIC in early 2025 to support renewable and next generation energy projects. In September 2025, we partnered with Export Finance Australia and Citi to mobilize $180 million specifically for green infrastructure, marking EFA's first ever financing initiatives in India. Now coming to main financial parameters of PFC, during first half financial year 26, our standalone net profit reached to 8,963 crore. This represents an increase of around 11% from first half of financial year 25. Last slide, you can see our disbursement figure also, which has reached around 86,000 crore in first half of this financial year. And our sanction for first half financial year 26 is approximately 1,53,000 crore. Our standalone net worth has reached to 98,000 crore as of 30th September 2025, increase of 13.5% year-on-year growth, and our net NP ratio is 0.37%, which have demonstrated our focus on resolution and financial discipline. So now talking about our dividend payout for the current financial year FY 25-26, we have already declared two interim dividend, rupees 3.70 and rupees 3.65 in November. This brings our total dividend for the first half year to rupees 7.35 per share. PFC is funding to state sectors, central and joint sectors, and also to private sector entities. As of first half year 26, 76% of our standalone loan assets is dedicated to government sector. As of now, generation and distribution from the bulk of our loan portfolio, that is around 86%. This slide basically shows that PFC is funding throughout India and has its footprint across all major Indian states. Now looking at the assets quality of the PFC, as of first half financial year 26, PFC's gross NPA is 1.87% with a provision around 80% of the gross NPA. The net NP ratio is 0.37%. We can see that both our gross NPA and net NPA are coming down consistently. Our gross NPA has came down from 12.5% in financial year 16-17 to 1.87% in first half financial year 25-26. And our net NP ratio has come down from 10.55% to just 0.37% in H1 financial year 25-26. Now coming from lending to borrowing side, we are raising funds both from domestic as well as international market. As of September 30th, 2025, domestic currency borrowing make up 80% and foreign currency borrowing make up approximately 19% of our total loan liabilities. To protect against market volatility, we have hedged 95% of our foreign currency portfolio for exchange risk. As regard domestic currency borrowing, 55% of borrowing is through bonds and 20% through term loans. PFC is also authorized to issue 54 EC capital gain tax exemption bonds. These are specific instruments that allows taxpayer to claim exemption from long-term capital gain arising from sale of immovable property. These bonds can be issued only by specific government-backed companies, and PFC is one of them. In this slide, we will talk about strategic implementation partnership with Government of India. PFC is one of the largest renewable energy financer in India and has a dedicated green loan book of rupees 85,000 crore as of 30th September 2025. PFC also serves as a nodal agency for late payment surcharge, that is LPS rules, to ensure that generating companies receive timely payments. PFC also manages the Prapti portal, which acts as an information portal wherein suppliers enter invoice details and DISCOMs update the corresponding payment information to ensure invoice and payment tracking for power bills in the country. PFC alongside REC is also designated nodal agency for the RDSSA scheme, which is a reform-based program with a massive outlay of rupees 3.03 lakh crore. PFC is specifically responsible for facilitating the implementation of RDSS in 17 states and union territories, including major states like Maharashtra, Gujarat, Andhra Pradesh, and Telangana. Through RDSS, PFC aims to help DISCOMs to reduce AT&C losses and eliminate the ACS ARR gap. PFC is also the nodal agency mandated by Ministry of Power to release the annual integrated rating and ranking of power distribution utilities. It provides a comprehensive report card on the financial and operational health of around 63 distribution utilities across India. Recognize the need of the R and in alignment with Government of India objective, PFC has been a cornerstone of India's energy transition. We have supported 64 gigawatt of the nation's renewable energy capacity. We currently fund approximately 25% of nation's non-fossil fuel installed base. We have successfully raised green bonds from the US and Euro market and secured specialized non-thermal finance from Japanese yen market. Our efforts were officially recognized at RE Invest 2024, where PFC was felicitated its trailblazing contribution in helping India achieve its 200 gigawatt non-fossil fuel target. This award reinforces our status as a trusted financial partner for the Ministry of New and Renewable Energy, that is MNRE. Now moving from our company's overview to the specific to our current bond issue, we are incredibly proud to launch our rupees 5,000 crore public issue of secured, rated, listed, redeemable, taxable, and non-convertible debentures. This issue is structured with a base issue size of 500 crore and with a green issue option of 4,500 crore, aggregating to rupees 5,000 crore. The issue is AAA rated by CARE, CRISIL, and ICRA, and the face value of one bond is rupees 1,000, except for zero coupon bond, where which are issued at a discount and having face value of rupees 1 lakh. To cater the different types of investor, we have introduced tenors from 5 years to 15 years, offering coupon ranging from 6.80 up to 7.30%. As our ED sir has already pointed out, this is the first ever public issue of CBDT notified zero coupon bonds, which are issued at a discount, and the difference between initial investment and the maturity value is taxed at the time of maturity at the rate of the applicable long-term capital gains tax. The bonds are proposed to be listed on NSE, which is our designated stock exchange, and majority of these funds will be deployed by us for onward lending and debt servicing of our major outstanding borrowings. This is the issue structure. We have 5-year, 10-year, 10-year 1 month, zero coupon bond, 15 years annual payment, and 15 years cumulative payment option. And there are 4 categories also. category 1 QIB, institutionals, non-institutional, HNI, and retail category. So the category wise rate of interest and series wise bifurcation of rate of interest is mentioned in the slide. So before I conclude the presentation, I must acknowledge various intermediaries who have assisted us in this public issue. Our lead managers, Nuama Wealth Management, AK Capital Services, Tipson Consultancy Services, Trust Investment Advisors, Debenture Trustee, Beacon Trusteeship, Registrar K Fintech, Legal Counsel Trilegal, Stock Exchange NSE, and our credit rating agencies CRISIL, ICRA, CARE. Thank you everyone for your attention. I hope I was able to give you a broad overview of Power Finance Corporation PFC, the funding for a better tomorrow. I will hand over the forum to Anjali Madam for further.
Thank you so much, Bhishma. And thank you, Tabasum and Rakesh, for your insightful knowledge about this PFC and the issue which is going on. So we will just take few questions on this. Okay. There is one question which is raised from our investor that what is the taxation in that? Can you give the clarity on the taxation part?
So with regard to taxation, apart from zero coupon bonds, it is normal taxation as per the income tax slab, whatever is applicable to that particular investor. And TDS also will be deducted on those bonds. In zero coupon bonds, however, these are CBDT notified zero coupon bonds. So the amount which you receive at the time of maturity and the amount which you have invested. So the difference between that amount will be taxed at long-term capital gains. Right now it is 12.5%. So whatever the tax rate is applicable at the time of maturity, it will be taxed at that rate.
Okay. Thank you so much. The second question which is there is what is the difference between the normal issue 5 years, 10 years and the zero coupon this thing, right, bonds?
So the difference, there are two major differences. One which I just told you, the taxation angle is there because in zero coupon bonds it is capital gains tax, while in other bonds it is normal tax. The other is that in other bonds you get an annual coupon, you get an interest payment every year. In zero coupon bonds there is no annual payout to the investor. You get the final amount at the time of maturity. The third difference is that in case of other bonds, the bonds are issued at face value. However, in case of zero coupon bonds, they are issued at a discount. So suppose in zero coupon bonds, the minimum number of bonds which you can subscribe to is 1 and the face value of that bond is 1 lakh rupees. So at the time of subscription, you will have to pay the discounted amount of 1 lakh rupees, which is around 50,000 rupees. I mean, as per each category of investor, it will differ. And at the time of maturity, you will get 1 lakh rupees. So these are three major differences.
Okay. The another one is how it is beneficial in the long run. If I invest in PFC right now, and what will be the liquidity? If suppose I'm buying for 10 years, okay, and I want to exit after 5 years, it is possible. How it is going to work?
Yeah,
Can you
it
just
is
throw
it is
light?
tradable. It is a listed product. It will be listed on National Stock Exchange and it is completely tradable. So anytime you can sell it off in the secondary market. So liquidity is not a problem.
Okay, fine. Liquidity is not, as you can just hear that liquidity is not a problem, and the options which we have is
And one
5
more
years.
thing, Anjali, I would like to add that it is PFC is a AAA rated company, so it is a AAA rated bond. So I don't think it will be difficult to sell off this bond in the secondary market.
Okay, fine. So I'll just round it off like this session. Right now, after so many years, we have come up with the NCD, which is AAA rated and a good opportunity for you all to invest in, which we have a 5 years horizon, 10 years, 15 years option with a the zero coupon option also available with us. So it is very easy. At one click, you can invest in. In debt market, 7%, 7.20, which we are getting, is not a small interest amount which you are getting as compared to the normal bond rate which is going on. As compared to in the secondary market, currently the bonds which are already listed, it is traded at premium. So why to go for premium and not to buy these bonds? Okay, so there is an option which you can run through and you can just buy for that. So this is what which we can tell. Any other thing, Tabassum, from your end, or we can conclude the session?
No, I would just like to add, thank you so much for organizing this session. And I hope all the people who are attending this webinar, first, I would like to thank them as well for their interest. And I hope they will, use this opportunity and invest in PFC and connect with the PFC family.
Correct, correct. Thank you so much for your valuable time. Thank you so much for joining.
Thank you, Anjali.
Thank you so much. Thanks.